Good afternoon, everyone, and welcome to a live streaming webinar, Understanding the CARES Act for Small Business Owners. This webinar, we have a very special presenter today who's an expert in this topic, Mike Crumbo, who is with the Indianapolis and Greenwood chapter of SCORE. Mike, how are you doing today?
I'm doing fine today. I hope everybody else is staying safe.
Absolutely. Mike, I have your presentation up on the screen and I will yield the floor to you. So just go ahead and let me know when you want the next slide.
Okay. Well, good afternoon, everyone. I hope you're all doing well. As Ryan said, I'm with the SCORE chapter in Indianapolis. SCORE is a nonprofit organization that mentors business owners across the United States. So there are 10,000 mentors like me who do this on a volunteer basis. There are over 300 chapters, and Indianapolis has a chapter of around 90 people. And we're a resource partner of the SBA. So you'll notice the SBA logo in the lower right corner of my slide. We work very closely with them, and we're here to help. So if Ryan wants to move on to the next slide, we'll get started. I'm going to talk about a COVID-19 action plan, and the CARES Act is a big portion of that, and I'm certainly going to spend time on that, and I know you'll probably have questions. But I also want to talk about some non-CARES Act related issues, or maybe items in concert, and one of those is going to be revenue enhancement, and we'll talk more about that as we get there, and cash management. And I'm a stickler for cash flow statements and good cash management practices. So I want to spend a little time talking about that, because whether you get a CARES Act grant, or you get a loan, or you get some other kind of help, you need to be able to figure out how you're going to spend that. So let's move on and we'll talk about the CARES Act. So the next slide. Okay. So the CARES Act, there are actually 4 segments of the CARES Act, and of course the reason Congress has passed this and then refunded it is because of the importance of trying to get the small businesses in the United States back up on their feet. A huge portion, over 70% of the American economy is small business, and it's, you know, the big guys get all of the glamour. But the small businesses make the United States work. So we're going to talk about those 4 elements of the CARES Act. One of them is the Paycheck Protection Program, called PPP for short. There's a loan payment deferral program that isn't spoken about much in the press, but it's an important aspect of this to know. There's an Economic Injury Disaster Loan Program, and that's the $10,000 grant. The Economic Injury Disaster Loan Program, called EIDL, which is a loan, and we'll talk about the terms of the loan and the qualifications for that loan to come up, and that's a part of the overall Small Business Administration Disaster Loan Program. And the last thing we'll talk about under CARES is going to be the Emergency Economic Injury Grant, and here is the $10,000 grant that you've probably heard about, with no payback required. So we'll go to the next slide, and here we'll talk about the Paycheck Protection Program. Under this program, the maximum loan that a business can get is 250% of their average monthly payroll costs. So when you take a look at your compensation under payroll, you take the total compensation, any vacation accruals, any leave accruals, insurance premiums, the taxes that you pay on those payroll items, and that's the base number of a month that you use, and then you can apply for a loan that's 250% of that. Now there are a couple of exclusions. One of them is that the pay limit is $100,000 per year for an employee. So if you have an employee over $100,000 a year, it becomes problematic. That is beyond the limit of acceptable, so they have to be excluded, and it must be U.S.-based employees. So if you have an international feature and you've got somebody who's working for you overseas, that person is not, that pay is not eligible for this. And then the big question, of course, is what can you use this money to do? One of them is you can continue payroll costs, and the idea behind the program is that you would maintain your employees in the business and be able to continue paying them for up to 8 weeks. It would also cover their medical insurance and any leave expenses that you have, and that would be like a vacation accrual or something like that. And then interest expense for your mortgage. If you've mortgaged the building that you're in, or any of the other things that are related to that, the interest but not the principal can be included in the uses. And then if you're not mortgaged but you're renting, your rent expense and your utility expenses. Now the big, and it's a 1% loan. So the big issue with this is that it will be forgiven if you use it for the designated purposes. So when you fill out your application on this, you need to define how you will be paying, or how will you be using the money. And then as long as you stay within those guidelines, at the end of the loan period, the loan will be forgiven, which is a pretty nice deal. Now let me just make a comment. The PPP program ran out of money very quickly in the first round. And another $310 million was appropriated by Congress and applied to this program and went into effect on this past Monday. So if you had already applied for this and were in the queue, it's a first come, first serve. And if you haven't applied for this, you can, and I'll talk about a few of the items related to your application as we go along here. But I would say that you can apply for this loan through banks. This program is administered by banks, credit unions, and other non-traditional financial institutions. So if you're working with a bank or a credit union, that's fine. If you have a loan through Bankable, or you want to contact Bankable, which is a micro lender here in Indiana, and Anderson at bankable.org, you can do that. You can also apply for this program through PayPal, Square, and Quicken. And they're all eligible under the SBA guidelines to process the applications for this program. So it's pretty far reaching as far as both traditional and non-traditional lenders. So that's the big difference with this program, is it's administered by financial institutions. So we'll go on to the next slide, and we'll talk about this item of using your loan payment deferrals to augment your cash flow. So if you already have a loan with the SBA, it's called an SBA-backed loan, and it's either a 7A or a 504 or a micro loan. And let me talk about that for a second. The 7A loan is pretty much for operating expenses. So some commercial real estate expenses, you can borrow it for facilities like build out. You can use it for a mortgage, for acquisition of equipment and other items. And that's the 7A. It's kind of the most standard loan. A 504 SBA-backed loan is for equipment, product components, fixed assets that you're going to use for an expansion of your business or modernization of where your facility is. And a micro loan is a loan of last resort. If you've been turned down for a loan and can't get it somewhere else, you can get up to $50,000 under a micro loan program through either Bankable here in Indiana, between bankable.org that I told you about earlier, or the Business Ownership Initiative out of Indianapolis, which is a part of the Greater Indianapolis Chamber of Commerce. So if you already have one of those loans, you can petition to have the payments and interest set aside for 6 months. You can defer that for 6 months, and you need to talk to your lender about that. and you have to ask for a loan modification, and you can do that without the interest continuing to accrue. And so you just get a deferral for the 6 months because of this disaster. And then if you have an existing disaster loan, the SBA will automatically defer payments on all outstanding loans through the end of this year. So you need to think about that because it keeps cash in your pocket instead of having to continue to send it into your lender. Now, if you don't have an SBA business loan, you need to talk with your borrower, whoever you borrow with, the bank that lent you, the lender, and discuss what their options are. And I've had clients who have gotten 3 months deferrals without penalty in order to conserve their cash and be able to move ahead with that. So those are some other options in payment deferrals. So we'll move on to the next slide. And we're going to talk here about the EIDL loans, the economic injury disaster loans. And you apply for these directly to the SBA. And if you already applied before CARES ran out of money the first time, you're still in there in the queue. But the important thing to notice is you need to take a look at your application number that you got back from the SBA. If the application number is in the 300 series, you're good to go. They're going to process it as soon as they can as soon as they get to you. If it wasn't in the 300 series or it wasn't applied, you can still reapply. And you apply directly to the SBA. Now, let me say this about that. I was on a conference call the other day, and as most of you may have heard, the SBA's website for these EIDL loans crashed on Monday, like 15 minutes after the start of business. And as of Wednesday, when I was in my last conference with the SBA, they had not gotten it back running again. So this is one of those situations where unless there's and I don't know that there'll be a publication of when it's up and running, I think you just need to keep trying. And I wish I could tell you it was simpler than that, but I think that's the straightforward scoop, is that you need to keep trying. So how can you use these funds? These are working capital loans, and you can use them for the following kinds of things. So you can pay your fixed debt. So if you've got credit card debt or you've got another debt that's a high interest debt, you can roll it into this loan. You can use it for payroll as long as you didn't apply and get a PPP loan and use it for payroll, because you can't double dip the two programs. You can pay off your accounts payable with this loan, and you can use it for other bills that you would have normally paid in the course of doing business, but when the disaster occurred, it shut you down. So you apply for those values of funds. The loan will help you stay afloat during this declared disaster. So the purpose is to let you restart your operations once you can. So you want to have this money kind of help you get through the bad period here until you can get yourself opened again and get rolling and earning more revenues. The EIDL loans are not meant for business expansion. So no mergers and acquisitions here, no buying extra space in the building that you're in, or any of those kinds of things. It's just to keep you going until we can get through the shutdowns that are requisite of this problem that we're in. So on to the next slide, and we talk a little bit more about how much can you borrow for this. So the eligible companies can get up to $2 million. And here again, it's a function of what you visualize as your demand during the period. And so you need to start looking at the application and start putting together your numbers from your accounting system to be able to do that. The interest rate on the disaster loans are 3 3/4% for a small business. And there are certain nonprofit organizations that can borrow as well, and their loan rate is 2 3/4. And the term is 30 years. That's up to 30 years. And the first payment isn't due for 12 months after you receive the funds. So if you have credit card debt at 16% and you can roll it into this loan and get it approved, then you're already down to 3 3/4, and you don't have to pay on it for the first 12 months without penalty. There is no prepayment penalty for this, by the way, in case you were wondering about that. So if you're able to pay it off sooner than the 30 years, more power to you. And the terms are really quite good. There are no closing costs. There are no startup fees. So it's a pretty clean loan. Here again, handled by the SBA. On to the next slide. And the general loan approval criteria, how they make their decisions is, one is your applicant's credit history. So if you have a pretty good credit history, your credit score, I would say, is above 650 to 700, in that range or above, then that probably isn't going to be any kind of problem. And SBA has some flexibility, so don't get too worried as long as you have a reasonable credit score and history. The repayment ability, you can determine. The determination that the SBA has to make is, are you going to be able to stay going long enough to repay the loan? That's their big issue here. And so they will look at sort of the information that you have to provide to determine if you're going to be able to repay this loan. I mean, if you're so far underwater that it's unlikely that this will even help you get through the time period, it may be a no-go for them, but they have to make that decision. And then there's eligibility requirements. So the business has to be physically located in what's called a disaster designated area, and has to have suffered working capital losses due to the declared disaster. Well, guess what? The COVID-19 disaster is worldwide, and so everybody in the world is under it. So that makes it easier for them to say everybody is eligible for this. And so then the question is the working capital losses that you may have suffered in this, and that is their only real big determination here. So that's the sort of the eligibility requirement. So on to the next slide, and we come up to the grant portion of this program, Emergency Economic Injury Grants. And this is under the Economic Injury Disaster Loan Program. So if a company has been in operations, the company has to have been in operation since January 31st of this year, and when the crisis was announced, and the emergency economic grant is available from that point in time, January 31st of this year, until December 31st at the end of the year. And the grants are backdated to January 31st. So if you've already applied for the grant under an EIDL application, you'll be eligible to also receive the grant. Now, the grants ran out of money just like everything else did the first time around. So I wouldn't think that December 31st is even a viable date. If you haven't applied for it, I would apply for it now, because it's a grant. Okay, there is no repayment. This is not a loan, it's a grant. And so you can use the grant for any business related purpose. And it's really somewhat similar to the individual incentives that each person received. Every person in the United States received $1,200, and families that have children received an extra $500 per child. It's similar in nature to that. It's a $10,000 boost of money to keep businesses viable. So that's the grant. And that's really, we've now covered those elements of the CARES program. And so I want to move on to that next section of talking about sort of keeping the business alive. So the next slide is a comment that I usually make to a lot of clients, and that It's cash flow, not profit. That's the key element of a business. Cash flow, and I'll talk a little bit about it because it's really important. When we talk about what's going on right now, for many businesses, there is no revenue. And so they're dealing with whatever cash they have on their balance sheet. And it's either sitting there in cash ready to be used. It's sitting there in the bank in the savings account, if you will, as a part of owner's equity or retained earnings from a prior month. But the cash is the only thing that's there because no sales are taking place and there's no revenue being generated. So profit is a secondary thought at this point. Let me say that during my career before I retired, I worked for a very large corporation, and we spent more time talking about cash flow than we did about profit. And I know you may find that hard to believe, but the cash was going to be able to make our dividend payments, and so our shareholders were more concerned about their dividend payment than they were about exactly how large a profit we were generating. So the cash was the big issue for us. So let me move to the next slide. And this is a sort of a simplified cash flow statement. And the highlighted areas are cash flow from operating activities. So when you have cash come in from a customer, you have to pay cash out to your suppliers and to your employees in the simplest sense. And so you can calculate how much money is coming in from your operating activities. And whether you make a product and sell it or whether you have a service and you provide it, there's always an operating activity line that's the input of cash. And that result of those two numbers gives you your net flow from operating activities. The cash flow from investing activities is you may go out and have to buy another piece of equipment, or you need to buy another computer, or you need to upgrade your desk, or whatever it happens to be. And so you're going to invest in some equipment or land or another building. And that's the additions of equipment are a negative cash drain because we're not talking about accrual accounting here. This is money out the door. You had to buy the equipment. And so you have to have the cash to pay for that. Cash flows from financial activities are a little bit of a mix. Part of it is proceeds from capital contributed. So if you add more money to the business, or you have an investor who brings money into the business, then that would be the proceeds from capital contributed. And if you got a $10,000 grant under the grant program, that would go on this line. That $10,000 would drop right onto your cash flow statement there. Any drawings of financial activity would be a reduction of that. Proceeds from a loan. So if you get the EIDL loan or the PPP loan, this is where it would go. It would go into your financing activities. And any payment that you make against that loan or any other loan that you may have comes out of this line. And so you can calculate what the net cash flow from these financial activities is. And then the simple thing is to just add them up, and you get either an increase or a decrease in cash. And in this case, George Catering Company is in year one, and so they didn't have any cash at the beginning of the period, but they've got $14,800 at the end of the period. In businesses that are ongoing, there's always a beginning cash and an ending cash to see where it is. And let me say, many companies will forecast future cash flows to get a better understanding of it. We're not talking about profit or loss here. We're only talking about cash. So the things like depreciation and amortization and all of that stuff, which you use because of taxing laws, are not important when you're just dealing with how much cash do you have on hand and how much cash do you have available to use. So I'm going to move on to the next slide and talk about that operating revenue side of the business, the operating cash side. My experience with clients that I've had and with others that I've talked to who are not necessarily clients, they've looked at alternate delivery programs for the product or service that they provide. So you're all familiar with online program delivery, right? There are companies that like Target, who are selling about as much online as they used to always sell in their stores, because of the limited number of people that are coming out and going shopping. But the online businesses have done quite well during this period of time. And there are businesses that have converted some of their items to online. So I've got one company that was a pretty much hands-on business that's doing the same business online in an online environment. And you can think about gymnasiums gyms and exercise areas that can't have anybody in there anymore. And they've got competition now from Mirror and Peloton and some of these other programs where you can do all of that in your own home. So somewhat creative. Curbside pickup, restaurants have gone to curbside pickup in order to continue selling their product. The delivery to the customer, there are businesses that like floral shops that really weren't open at any other time, but they've gone to delivery where people can order and have it delivered to their home. And then there's video delivery. So I know I have a client that was in that gym framework, and they're providing videos to their existing subscribers because they can continue to use them for exercising, but they're just doing it with a video at home instead of in the building itself. So that's one way to generate or continue to realize revenue during a period like this, being creative. The other is to talk to your suppliers. One is good cash flow management says hold the payments to the last possible day. Now, I mean that seriously. You still have to pay your vendors or you won't have any vendors when this starts again, but you don't have to pay them in advance. You just hold it until the very last day. If it's net 30, you wait until day 28 to send it to them, or day 29, or you do an automatic bank transfer on day 30. Talk to them about negotiating payment terms. If you are on something like a net 30 days, then talk to them about making it a net 60, so that you can drag it out. You still are obligated for it, but you want to be able to be upfront with them so you're developing that continuing relationship. And then defer future deliveries. So if you had some kind of standard delivery set up with your suppliers, make sure that they're not trying to send stuff to you that you don't need anymore. And it takes a negotiation to make that happen. But think about that. Don't just let things sort of continue to go along the way they used to, and take some positive action about it. So on the next slide, the financing activities that I was talking about, you've got things that you owe, right? So you've got creditors that you need to talk to. So you can talk to credit card companies and you can defer payments on credit cards, or you can do interest-only payments for a while in order to preserve your cash. If you're leasing from a landlord, you need to have a heart-to-heart talk with that landlord. Now, I know landlords are not always understanding sometimes, but landlords have got to figure if they have a whole bunch of businesses if they have a condo with a bunch of businesses in it, and all of them are shut down because of an order, they have to be a little more understanding and a little more pliable if you're talking to them about deferring your rent for a couple of months. And then talk to your lenders about existing loans. I've got clients who have been able to have the banks that they've been dealing with give them a deferral of a period of time without penalty so that they can preserve their cash. And so it's worth that talk. Everybody, this is a time to really test out your negotiating skills. And then talk to your bank, because if you have an SBA loan, you need to discuss with them the 6-month deferral. If you have private debt, you need to talk about renegotiating that. And that's deferring your payments or doing interest-only service or trying to leverage your line of credit if you have a line of credit with the bank in order to try to make sure you've got enough cash to weather the shutdown that you're faced with at this point. And that's just good cash management. But sometimes we forget about that when the world is falling down around our ears. And I think these are some of the things that you need to consider as you move ahead after this is over. So the last slide I've got here is just who I am and how you can get in touch with me. As Ryan said, you know, we're here in the central Indiana area. There's actually our chapter headquarters are up in the Castleton area. We have a branch in Anderson, and we have a branch here in Johnson County. The branch here on the south side of Indianapolis covers a 4 or 5 county area. And we're pretty fluid about being able to meet with clients. And in this environment, we do it through Zoom. And so we do one-on-one meetings with clients, or 2-on-1 meetings with clients through Zoom, and just continue doing what we've been doing all along, providing a service that's there for the life of your business. So I'm presuming that we may have some questions. And so I'm going to let Ryan jump in here and let me know what kind of questions you have.
Yes. Mike, thank you for presenting that. To our viewers here, we don't have questions in the comments yet, but I encourage you, if you are watching, any questions that you have about anything Mike has talked about, or any other questions about the CARE Act for small business, please ask them here in the comments, and we will ask them for Mike so he can answer them for you. Mike, I actually have a question for you.
Okay.
And that is, what would differentiate a business from being able to work with a traditional bank versus a micro lender like how we have SCORE here in Indiana?
I'll start with the microloan. Microloans were made available. Microloans are underwritten by the SBA. But Bankable and Business Ownership Initiative, called BOI in Indianapolis, can provide lending if a business is attempted to get funding from I'll call it a traditional bank, and hasn't been able to get it done because of some past credit issue, because maybe their credit rating just isn't high enough for the bank. You know, banks have new rules that they are under ever since the Great Recession, which look like the worst thing that had ever happened to us until now. But banks sometimes will not lend to small businesses, and sometimes if it's a startup company, they won't lend to them. So the idea of a micro loan, $50,000 maybe all or less is maybe all a company needs is to get their business off of the ground. And so Business Ownership Initiative and Bankable are there to provide that money as an SBA loan, and they provide that when the company cannot get a loan through the traditional series. So that's where the micro lending comes in. Under the current disaster program, Bankable, and I'm presuming BOI, I have not seen their name listed, but I know Bankable is processing the Paycheck Protection Program applications because they're a part of that SBA family of related companies.
Great. And so we have a question from Carly Henry, who's here at Open in Indiana with us, and she wants to know if you have any information about funding that the state of Indiana has put into relief funds for small business.
I do not know if the state has done that. I know Marion County has taken an action to provide funding through some grants and other programs for the smaller businesses in Marion County. But I don't know that the state has done that. I do know that the state has, let me say the state is trying to position itself for the other side of this disaster. And so there are it's like they're running virtual job fairs, I think, coming up this weekend to fill positions that they know are now open. They are ramping up their training programs through the Department of Workforce Development in order to support people who may be faced with transitioning jobs, where maybe the business they're with doesn't survive this and they need to find the next step. So they want to be there to be able to give them the training to move into these other jobs. But as far as direct support for the businesses themselves, I don't know of any statewide program.
Okay. Let's see. I still do not see any comments here.
Okay.
So Mike, I'm going to go ahead and assume that means you've answered everyone's questions from the get-go.
I find that hard to believe, but I'll give you a quick piece of information that I heard the other day that I think is sort of jaw-dropping. The Paycheck Protection Program, the system on in that program, the SBA, when it goes through the banks to the SBA. The SBA commented that they processed 1.6 million businesses' applications in that program before they ran out of money. And that was in those 14 days that the program was open, they processed what was the equivalent of 14 years worth of loans. And they said there were 5,000 vendors active, which means they were banks, credit unions, or these other non-traditional lenders that were passing through the applications. There were 5,000 of them, and they said they usually only have 800 lenders in a year that they deal with. So the program got everybody's attention, and everybody certainly responded to it. That's why I say if you've got, the program that goes, you can put in an application until December 31st on the grant program. I don't think there's going to be enough money left. I do know that as of Wednesday, which is yesterday, Bankable still had money available that they could process applications for under the Paycheck Protection Plan. So I know Bankable is still processing it, and I know that there was preferential award of this program. So in other words, large banks were not allowed to jump in on this. Smaller institutions, smaller banks and credit unions were given some priority in order to make sure that some of the smaller businesses were able to get their awards. So I'd stay on top of it and make sure that you keep working at it.
Wow. You said how many years worth of applications did that represent?
Yeah, it was 14 years of loans were processed in 14 days.
Wow. So this is a pretty far-reaching a program as far as people's applications go.
Oh, it absolutely is. And if you think about, the U.S. economy is around 18 or 19 trillion dollars a year, and 70% of that is in businesses that certainly have less than I'll say 100 employees. So when you think about GM and GE and Boeing and Raytheon and all of these other very large corporations, publicly traded corporations, while they have a lot of revenue and a lot of employees, they represent a small percentage of the U.S. economy. The economy lives on the small business on the corner, and sometimes it's a franchisee, but it's the smaller business where we go there on a regular basis. And so when you are trying to figure out what's an essential and a non-essential business, once you get past grocery stores and pharmacies and a few of these other businesses, think about vet service. that's got to be pretty much curtailed. And so like, I don't take my animals into my vet service, but I do go by and I buy food from them and I buy medicine for my cats from them. And it's curbside pickup at a vet service. So these small businesses, in this case, 1.6 million businesses applied for loans in the first 14 days of the Paycheck Protection Plan, and that's way more than than the SBA normally processes for loans. People get SBA loans when they're going to start a business, and this is a totally new world for them, and that's part of the reason why it ran out of money. It's also part of the reason why their system crashed when they tried to restart it, is because it wasn't, it's new, and new things don't sometimes always work the way you want them to.
Yeah. Mike, what's the long-term impact on small businesses looking to be with everything going on?
Oh, well, that's a good question, and I'm not sure I don't have a definitive answer. I probably have an opinion. I think that unfortunately many of them may not survive this. Most businesses tend to run on a kind of a low level of cash. You think about when we talk about individuals living paycheck to paycheck, many businesses live week to week, month to month, day to day on their sales, and being able to turn the cash over pretty quickly. So if you cut them off, then you don't have, then where are they going to go, right? Many of the small businesses, if they can still be incorporated, but they may only be one-person businesses. So if they don't have, if they don't have money coming in, they've got to find a different way of making a living. Now, the unemployment, the change in the unemployment compensation program, which expanded it into what are called the gig workers. If a person is the sole owner of an LLC or an S corp, or there is a partnership, small partnership, then the owners are in a position of those businesses to be able to apply for unemployment. And because let's say they're not taking payroll off the payroll. If they're taking payroll and they've got other employees, then they can make themselves a part of the Paycheck Protection Plan calculation, right, and go for that money. But if they aren't a part of that and they've been taking their money in a different way, then they can apply for unemployment and at least get some money based upon the compensation they've been paying themselves and this extra $600 a week. So they might be able to pull through and survive, but I'm afraid too many of them have not had the capital or the cash available to be able to weather a storm like this. Just as individuals, when they're doing their own budget, need to have an emergency account or a rainy day fund, if you want to call it that, the businesses need that same kind of deal, and it's called retained earnings or the owner's equity in cash or whatever you want to call it, but they need some money in case things don't go the way they expected them to go. Let me make a comment about that. Indiana, as an example, Indiana has $2 billion, at least the last I heard, $2 to $2.1 billion in cash reserves. And they've fought diligently over the last several years to keep that money and not spend very much of it, or at least spend some of it strategically. So they're now in a position where their revenues have gone away. The price of oil, well, let's say, no, I'm still driving on a tank of gas I got 2 months ago, right? So the taxes that I pay in gasoline that go to road construction in Indiana aren't going to road construction because I'm not buying gas. And sales tax revenues are down because most businesses are closed, and the only ones that are open are generally pharmacies and grocery stores and restaurant carryout. So the state of Indiana, the county governments that are getting money through the county individual income, the county income option taxes. It's sort of like the tax on that the county gets of the money that you pay in state tax, and excise taxes are gone. So those entities, including cities and towns, aren't seeing the kind of revenue that they expected. So if they don't have a rainy day fund, and I'm talking about schools and libraries and other entities that are a part of that structure, if they don't have a rainy day fund, they've got nothing. So all of those entities have a rainy day fund just for this kind of plan, and that's a part of how they budget. That's exactly what small businesses and large businesses need to do. So the ones who have some capital and are able to get through this, or are able to get a loan that'll help them bridge this period of time and get back on their feet on the other side, will survive. But I'm afraid too many of them will not survive because they weren't prepared for something like this. And this is a big thing, but didn't have anything that they prepared for, will probably fail.
And Mike, that brings up another important question that I'd like to ask you. For businesses that have had to lay off or furlough employees, will those unemployment claims be held against the business in the same way they would in any other circumstance?
Let me think about that. Well, the federal side of that, the $600 a week add-on that came from the federal government, will not. Let's go back. The way unemployment works is that a business who hires an employee pays a certain percentage of their salary to both the federal government for unemployment compensation and to the state government for unemployment compensation. And it's not an easy formula, but it's, in essence, it's like, I don't know, 0.4% of earnings for an employee up to $7,000 for federal unemployment, and it's about 2.5 or 2.3% on the first $9,500 of earnings of an employee for state unemployment. And then after that point, after the first $7,000 or $9,500, they don't pay any more money. The company doesn't pay any more money. And it goes into a fund, the unemployment fund. So when someone files for unemployment, it comes out of that fund. So from the standpoint of the business, they're going to, when the employee comes back to work, the business is going to put them back on their payroll, and then the payroll, when they do their payroll, the tax portion of the payroll will be state and federal unemployment, if you follow what I'm saying. So the company isn't necessarily penalized in that sense. They just don't have any, they're not paying any taxes right now because they don't have any employees on the payroll. And so they're not paying anything, right? They're not paying Social Security or Medicare. They're not paying state or federal unemployment, and they're not selling anything, so they don't have to cover any sales tax because they're not getting any revenue. So from that standpoint, that's part of the reason why the government entities are suffering, is because their revenue stream was cut off as well. Long way around, but there's nothing simple about taxes or government.
Agreed. And so, Mike, how can our viewers get in touch with you if they want to learn more about what the CARES Act means for their business, or if they need any other help in the business mentoring realm?
Well, on my last slide here, that's the one that's still up. You can reach me at 317-886-8601, and we can talk about what your issue is and what you're looking for. And if I'm not in a position to help you, there are several others of us here in the branch on the south side that can help you. You can also go to indianapolis.score.org, which is our website here locally in central Indiana. And if you are interested in having a mentor help you, when you hit the landing screen on the left-hand side is a very large box that says, I need a mentor, or request a mentor. If you click on that box, you just need to fill out some basic information about yourself, and you'll be contacted by one of our mentors, and they'll be really happy to help you. And of course, we'll be doing it through Zoom, but we can reach out to you, and as long as you have a smartphone, a tablet, or a laptop computer or a desktop computer, we can talk with you and help you through whatever the issues are you want to talk to us about.
And Mike,
here again, I was going to just say, I'm on the south side of Indianapolis, and we generally cover Hendricks, Morgan, Johnson, and Shelby counties. There's not like a wall there. You know, we're pretty fluid here on the south side, but with 90 mentors in the Indianapolis area, your best bet would be to go to indianapolis.score.org and hit on I need a mentor.
Yeah. Mike, I was going to say, I wanted to reiterate that you can help any business in any stage, whether they're just getting started or a long time established business, correct?
That is absolutely true. And we also work with nonprofit entities. So if you are in a nonprofit business and you're looking for help, we may be the only game in town for you around here as far as mentoring services, because our partners that do this, like the Indiana Small Business Development Center, only work with for-profit businesses, and the Women Business Council only works with for-profit businesses, and so we will also work with nonprofit entities, and have in the past. And so if you're thinking about starting a business, if you're getting ready to start a business, if you just started your business and you want somebody to talk to you about where you're going, or if you're in a business and want to talk about business-related issues, including growth or retaining employees or strategic planning or any of those things, or if you're later in your business and you're thinking about an exit strategy, about selling it or passing it on or whatever, we're here to help you do that, because we're here for the life of your business.
Great. Well, Mike, thank you so much for being our speaker today on our webinar. It was a pleasure to have you present, and it was very informative to see the information that you put together.
Okay, great. Well, it was my pleasure too.
And to everyone watching, thank you so much for watching our live streaming webinar this afternoon. Don't forget to join us again Tuesday starting at 4:00 p.m. for the next webinar.